Welcome to Illuminati Silver. We tell you the truth about silver. Today is Tuesday the 12th of January 2016 and we're briefly covering the issue of the recent slump in oil prices. Brent crude prices fell by more than 3% to $30.43 a barrel today, extending losses over the first 7 trading sessions of 2016 to 17.3%. At the time of this video, it stands at $30.96, down 1.8%, and extends a nearly 7% drop from Monday. Reasons given for this fall ranges from too much supply, the weakening Chinese economy, sliding stock markets, and a strong dollar, which makes it more expensive for those using other currencies to buy oil. Initially, prices started to rise when traders said support came after Nigeria's oil minister commented that a couple of OPEC members had requested an emergency meeting. But buying faded after the United Arab Emirates oil minister said that the current OPEC strategy was working and the first 6 months of 2016 would be tough, but there would be a gradual recovery in the oil market. So traders decided to focus on the global supply glut instead. Saudi Arabia, which sits on large cash reserves, has insisted it will not cut production unless non-OPEC members such as Russia also lower output. Growing tensions with Iran have all but killed off the possibility of Saudi Arabia changing course, with Tehran preparing to raise exports once Western sanctions linked to its nuclear program are lifted. Other OPEC members have said an emergency meeting is unlikely. Concern about slowing demand growth and market positioning has prompted analysts to lower their price forecasts. Barclays became the latest investment bank to revise its estimates, predicting an average price for Brent and WTI in 2016 of $37 a barrel, against previous forecasts of $60 and $56 respectively. Quote, although we still expect higher oil prices over the second half of 2016, we see prices moving up from a lower base than we previously envisaged and on a much shallower gradient, unquote, the bank said. Morgan Stanley analysts have stated that, quote, oil in the 20s, unquote, is possible if China further devalues its currency. And economists at the Royal Bank of Scotland predict that it could slump to $16, with Standard Chartered Bank being the most bearish of all, predicting a crash down to $10 a barrel. There is no doubt that the short-term outlook for the oil market is bleak, with production creating a surplus of some 1 million barrels a day, plus decelerating demand, and OECD inventory levels at all-time highs, so much so that storage is rapidly becoming a major concern. Lower prices seem all but inevitable. Whilst North Sea oil producers can weather the storm currently, and a number, but reducing number, of US shale oil producers can also survive this onslaught for the time being by increasing supplies to pay off debt interest, countries such as Venezuela, Algeria, and Nigeria are facing severe financial difficulties together with political unrest as the result of rapidly growing unemployment. Like most commodities, currently the trend is certainly lower, and we foresee this also continuing in the gold and particularly in the silver market during the first half of 2016. Since the start of the week, silver is down some 12 cents from $13.94 to $13.82, and gold is down $15 from $1,104 to $1,089. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website regularly at www.illuminatisilver.com. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice, and merely represent the personal views of its owners.